Hello, what is happening, traders? I hope you're all having a great weekend. So, as a new trading week approaches, I thought I'd give you guys a fresh top-down analysis on gold. So, if you recall, I previously made the last analysis when the market was here, explaining all the reasons why we expected a pullback and then the market to be attracted into this area of imbalance, this fair value gap that we had at the psychological level of 2000. And that is exactly what has happened. So as I said, the market has hit that upside target. So now it's time for a fresh analysis. We're going to clean our charts and we're going to start, as always, from a monthly time frame perspective. So what we can identify here on the monthly is we had this massive fake out to the downside. Now here, from a monthly perspective, the market was consolidating in the form of this wedge. Now, the wedge got broken to the downside. The market took out all of this sell side liquidity that was residing below these monthly lows, formed a significant low exactly at this level of demand in a bullish trend. Okay, so we made a fake out into a level of demand and then we broke back above. So here, I strongly believe, especially now due to the conflict in the Middle East, if that escalates, that could drive the price of gold higher. So I do strongly believe there is a good chance that we do try and go for new all-time high prices very soon here from a monthly perspective. Like I said, we made a fake out to the downside, and then we've made the bullish impulsive move and break back above. During this bullish impulsive move and break back above, the market, as I said, broke above very, very important monthly structure exactly here and formed the higher high. If we take our Fibonacci from the low to the high of the monthly impulsive move, we can identify that since the market formed the higher high, the monthly impulsive move, which is all-time high price for gold, the market made the retracement. The market retraced perfectly into the 50% fib. The 50% fib was in confluence with this monthly demand that we have all across this area. And you can see at the moment, although we still have 9 days and 5 hours left, so roughly one trading week before this monthly candle closes, at the moment we've got a very strong bullish engulfing candle, and it looks as though we could easily see the continuation higher and the market go and attack this equal high liquidity that we have from a monthly perspective. Now, if we drop down to the weekly, what we can identify from a weekly perspective, let's just clean the chart a little bit. Right, I'm going to just clean all of this. Okay, so what we can identify from a weekly perspective, since making the fake out to the downside, taking out this sell side liquidity residing below this ascending trend line, the market has been forming a series of consecutive higher highs, higher low, higher high, higher low, higher high, higher low. So by definition, we are in a weekly uptrend. So what we can also identify is this bit of price action here. Now, this is something we spoke about in the previous update, how the market was consolidating in this weekly range for a number of weeks. We also had this descending triangle, something we've spoken about already on the lower time frames. The market made a beautiful breakout to the downside, taking out all of the buyers' stop losses, so the sell side liquidity that was residing below this accumulation range lows. We made the manipulation to the downside, and now we've beautifully made a distribution to the upside. So we have this beautiful weekly accumulation, manipulation, distribution setup. The manipulation is obviously the break to the downside. The distribution is the break back above. Now, if we have a look closely at the break back above, what we can identify is from a weekly perspective, the market has printed this harmonic formation in the form of this W pattern. After a W pattern, the market will complete. Then the market has high probabilities, no certainties. The market has a high probability to complete the pattern at the neckline. Okay, so that gives us an expectation that sooner or later, during this overextended move to the downside, the market is going to make a retracement wave. Okay, and this is what I plan to potentially capitalize on this new trading week. So here on gold, although the monthly time frame is bullish, the weekly time frame is bullish. Okay, from an intraday perspective, from this move here, we are now overextended to the upside. And as I'm about to show you on the lower time frames, we're testing significant supply in confluence with the level, psychological level of 2000. Okay, so after this strong weekly impulsive move, and after the market has grabbed the external liquidity that residing above all of these highs, it's highly probable that the market will make a retracement into the internal liquidity that has been created during this repricing, this impulsive move to the upside. So now if we drop down to the daily time frame, what we can identify from a daily perspective. First and foremost, I'm going to just identify that area of fair value, which was our upside target last Monday, which has successfully been met. So that's the area of fair value that's been filled. Now here we have a a daily unmitigated supply zone. So an unmitigated order block exactly here. Okay. Now the market can easily get attracted into this zone, right? We have the high of the previous week here, previous week high, and we have the previous week low exactly here. Now let's dive right into this. Sorry, previous week low. So, like I said, down on the intraday timeframes, we are overextended to the upside after this beautiful bullish move. The market took out all of the buy stops, the buy side liquidity above each one of these highs. So now all of that liquidity has been taken. The market's filled this imbalance. We are very much due a retracement move. However, we have liquidity residing above the previous week high. We have a bullish weekly closure, and we have a candle where we can easily fill in this wick. We go down to the 4-hour time frame, and from a 4-hourly perspective, we are very clearly still bullish. So although that I strongly believe that the draw on liquidity this week will be to the downside, I think we still need to see a nice sweep of buy side liquidity from an intraday perspective, potentially a sweep of the previous week high before the market will make a correction, okay, and fill the internal liquidity that we have during this move to the upside, right? So what am I looking for here on the daily? Well, first and foremost, we have an area of imbalance right there. Okay, this could be a nice area where the market gets attracted back into for a correction move. Now, not only imbalance we have here, but we have the psychological level of 1900. Okay, price has literally just pushed through 1900, retested 1900, and pushed straight to 2000. Okay, and we could easily see once the market changes from an intraday bullish market to an intraday bearish market, we could easily see a retracement to this level. Now, if we go and take our fib from the low to the high of the bullish impulsive move, the current high, bearing in mind we expect a higher high before we actually see the corrective move. So let's say the higher high taps into this daily order block, right? Take our fib from the high to the low, and you can see we have the 50% and the 0.618 in perfect confluence with that fair value gap. So that can definitely act as a magnet. The market can definitely get attracted back into that level. So how are we going to be approaching this with students with a new trading week? The monthly, weekly, daily, 4-hourly timeframes are the best timeframes for the directional aspect of the market. The 15-minute and the 5-minute are my preferred entry timeframes to capitalize on those directional moves. Now, what we're waiting for here on the lower timeframes, okay, we're waiting for a couple of things, right? One of two things. At the moment, the hourly is obviously bullish. The lower time frames are obviously bullish. We have stop losses, liquidity above the previous week high. So two options here. This is my preferred option because we have a unmitigated supply zone above the previous week high. I would like to see a push up, taking out the liquidity above this high, mitigating this supply zone, and then the change of intraday structure. Okay, that's the first option. Or if price doesn't take out this high and we change structure, in other words, break below the higher low formations, okay, that is when I will obviously change my bias and I will say, okay, now the lower time frames are aligning with my higher time frame bias, and this is where I can start to look for shorts, right? So that is my trading plan for the week ahead. My preferred option, just to be clear, okay, my preferred option, my preferred scenario rather, just to be clear, is the market to take out the buy side liquidity one more time, residing above the high of the previous week, and then we will be monitoring all inside of that area for the market to switch from an intraday bullish market to an intraday bearish market. So that's my projection, guys. I hope you enjoyed it. Remember, just because we have this higher time frame directional bias, we still need to wait for the lower time frames to align, right? We can't just look for a short inside of this area as soon as the market taps into it, because we are trading against the momentum. the bullish momentum in the market, okay? And we could easily continue higher. So we need to wait for a change in structure to confirm our shorts. Anyway, guys, trade safe, trade well. I'll speak to you all later.